Good morning, everyone. This is Shrikant Rajan. Welcome back to the Stock Market Podcast from MPIinvest.com. Coming to market yesterday, what crazy volatility, isn't it? The market was like it opened with the gap up, fell down instantly, felt like it was just going for a fall. But from there was a major rise going above the opening, and from there again a fall and again a rise. Overall, a very volatile day. So if you think that this was probably due to Fin Nifty, I would say no, because yesterday it was not just the Indian market, but even the European market was completely volatile. Of course, there was a news coming in that Putin is going to speak, and till that speech, the market was volatile in the European market as well. And as soon as it was over, they stabilized, and by then Indian markets closed. So if you see yesterday, the major draggers were the PSU Bank. Yes, the PSU Bank has fallen. Most of the PSU banks, including SBI, has been falling, mainly because of all the tension that is coming in from Adani Group. And naturally, Adani Group also is on a very jittery mode. And until things stabilize, this is probably going to be like this. So this was not India specific. So yesterday we could see still the major top loser in Indian market was Adani Enterprises, and the top gainer I would say yesterday was the top gainer was NTPC, up by almost 3.25%. So yes, things are getting very difficult in the Indian market for a short term, I would say, until things are clear. But then one thing that we can notice, these problems were not only seen in Indian market, because yesterday after Indian markets closed, the US markets opened gap down, and after the gap down, a very volatile day again continued to fall down and finally closed almost 300 points down. In fact, yesterday was one of the worst falls in the US market in this year of 2023. So naturally, when the US markets have fallen, the global indices are in a kind of jittery mode, and we could see SGX Nifty kind of trading already lower. So we could see a good gap down opening today, and if you look at last 3 days, the last 3 days it could be we could see on Monday we could see the market opening gap up and then falling. Yesterday, we could see the market again opening gap up and then closing. And one important thing is that we need to see is yesterday, in spite of a gap up, the market fell and closed just 17 points below where it had closed the previous day. So I would say yesterday was more of a flat day in the Indian market. So now today we are experiencing a gap down opening. Now last 2 days, the gap up did not sustain and the market fell. And today the market is going to gap down probably by 50 to 100 points. If that happens, will the market further fall or will it rise from here is something that we need to watch. Now, why I am telling you this is, in the last 2 days, if you see, we did not have global cues because Monday, of course, Indian market opened, but Monday night, US markets were closed. Then again, yesterday, Indian market opened. So 2 days, there was no global cues from the US market. So yesterday was the first day, trading day in this week in US market, and we have seen such a big fall. But then generally, if you look at the history, whenever US markets were closed, Indian markets have either consolidated or had a trending day towards the higher side. But this time, for a difference, for the last 2 days, the Indian markets have fallen already. So that means we have kind of fallen enough, and probably we might see some more fall, but may not be as big as the 2 to 3% fall in the US. So if you see 2% fall in the Indian market would be almost 300 points down. So I'm not expecting such a big fall. So probably we could see some small fall. But then one thing I would say is, at the Gold Club, where we have taken some real good trades, I would say our position at 17,550 looks very safe at this point of time. So there might be some premium hikes that happens, but then it's good that we did not go closer at this point of time the way the markets is going to be volatile. Now today is Wednesday, tomorrow is a monthly expiry. The volatility is just going to continue. So things are not looking good for now. And I would say new traders do stay away from the market at this point of time. But then if you want to invest, I would say it is the right time to go on SIP mode to invest. Of course, I've been repeating it every day. But then yes, it's so important that you should start investing at this point of time. That can give you amazing returns as the period goes. So that is one important thing. Now, what happened in the US and why did the US markets fall? So first thing that we can understand is today is the day where the Federal Reserve minutes are going to come. So now when the Federal Reserve minutes are going to come, I would say, see, this is minutes of the meeting that happened last month, not this month. So that is a Jan end. Remember there was a monetary policy meeting at US. So this is the minutes of that meeting. And that time, at that point of time, the US markets were already, ready for a big rate hike, and they started cheering the lower rate hike. So that time the situation was good. But it is just now, recently in the last 1 or 2 weeks, where we have seen the data in the US coming out good, which started triggering the new fear of more rate hikes. So this minutes may not be a major event is what I feel. So probably there are chances that whatever market got sold yesterday in the US, there are chances of recovering today. But then, however, we can't talk about it market, because I always say we can never predict the market, but just we have a view on the market and just go with it. So right now I would say the market view overall is slightly bearish, but again for the short term, but over the long term, of course, I am always bullish on the market. You know that very well. So as I look at SGX Nifty right now, it is already trading in the negative. So definitely we are seeing a gap down opening. But then of late, SGX Nifty has not been indicating the correct value, because Indian markets have not been following SGX Nifty to the pre-open market. So there are chances that things might change. So let us really look at what exactly is going to happen in the pre-open market today. So as we speak, SGX Nifty is kind of at 17,881, which is kind of a recovery that is seen. So there are chances things can change in the Indian market pre-open as well. So of course markets are getting unpredictable. Of course they were always, but then we could see that there is no direction also in the market right now. So with such crazy volatility, there are a lot of traders who are there losing money without a proper view. But then I am glad we at MPI are still making a very small return, or at least some small, zero profit. So that is something that is kind of good at this point of time. So, however, like I've discussed in the previous meeting, we are looking to be more safe. So we will be exiting all our positions for this week today, and we will be taking the trade for next week in advance, not waiting for the volatility to kick in tomorrow because of the monthly expiry of Feb. So that is a plan that we have for today. Let's see how the market takes us, and looking forward to close this week with a positive gain. So with that, this is Srikanth Rajan signing off. But before we leave, do remember to press the like button if you love the content that we share, and do consider subscribing the channel so that you get the daily updates to your inbox. Goodbye. Have a great day.